Today's video is going to be one of those awesome and power-packed videos that you'd want to get your pen and your pad for. Alright, for today's video, we'll be sharing tips on how to sharpen your analysis skills, and this video is very important and time critical because the sooner you watch this video, the sooner you'll be able to take note of these tips and develop your analysis skills so you can discover potential 10x to 100x gems for this coming bull run. So without taking much time, let's get right in. Oh my god, I'm just so very excited. So guys, first tip on our list is research. Research. I can't say it enough. Research in order to be informed about what is going on in this market. All right, researching gives you power and access to information. That information in itself is power that helps you make good and quality decisions in this market. And take note, the quality of the information you get in this market affects the quality of decisions you will take as a trader or an investor. So I want to share with us some websites and other places we can get access to good information that will help us make better trading decisions. All right, so first on the list is CoinMarketCap. You know, this is the go-to website for everyone in crypto. They have so much data on different projects that we all trade and have interest in. So the reason why CoinMarketCap stands out amongst a list of other websites with the same features is that it verifies projects, and you can see that CoinMarketCap has either verified this or it has not verified it, and CoinMarketCap will let you know, and they will show to you that we have not been able to verify this data about this project, or have not been able to verify this or that about this project. They let you know and they show you the facts, they show you all the details. So you would definitely want to check out CoinMarketCap. Then second on our list is CoinGlass. Now this is mostly used by traders, but investors also use it. They have data on volume, long to short ratios, you know, different metrics in this market that are relevant for traders and investors. So you'd also want to do well to check that website out if you are looking for any relevant, authentic data. So guys, third on our list is Glassnode. Now Glassnode is an on-chain analysis company that uses on-chain data to form different metrics for traders and investors alike to look at and make better trading decisions. So now on Glassnode, you get access to 3 levels of data. Tier 1 is free, but for 2 and 3, you have to subscribe to Glassnode. And they also share a free bulletin every week to the email you signed up with on Glassnode. So the information that is packed on Glassnode is solely based on on-chain data, and it is very valuable because of how secure and transparent the blockchain actually is. Second tip on our list is understanding and simplifying technical analysis. So now, as a beginner trader in this space, you would almost throw every single indicator and everything you don't need on your screen. All the lines, all the patterns, everything you do not need will be on your screen. Yes, it's you, I'm talking to you. Yes, it will be on your screen. Now, you do not need all of this. It's just noise. The only way to make money in this market from technical analysis is to keep it simple, okay? The simpler it is, the better for you, and the easier it is for you to actually make money from technical analysis, okay? So now, let me just share with us a few tips on how to simplify your technical analysis, okay? First and foremost, just focus on a particular strategy, okay? Focus on making that strategy work. Do not jump from one strategy to another because you lost money with this strategy yesterday, you won't use it today. The strategy you used today, it worked today, tomorrow it doesn't work. You drop it and then you pick another one the day after that. You know, you won't be able to find consistency and you won't be able to grow as a trader or an investor. So you want to stop hopping from one strategy to the other and actually focus on building that strategy and making it efficient enough. Whenever a strategy fails, don't feel like the strategy doesn't work anymore. Sit down, calm down. That's why you should also take notes. You should journal. Look at what is actually wrong with the strategy and try to understand why it failed. That's the best approach you can take instead of hopping strategies. In order to solve the strategy hopping problem, focus on what is actually, try to find out what is failing in the strategy and make it work, okay? Now, second tip on how to simplify your analysis is focus more on support and resistance. Have these levels, have these key support and resistance levels on your chart, okay? And don't have too many chart layout on your trading view or whatsoever platform you are using to do your analysis. Do not have too many lines on the charts or too many levels. Just the key levels, the important levels. You mark them out. You know this is support, you know this is resistance. You want to buy at when price is at support, and you would want to sell when you're at resistance. Okay, or if you are trading futures, long support, you short resistance. That's how it works. Make sure you have rules and you keep your analysis as objective as possible. Have rules that govern your analysis, how you do your analysis, and make sure you keep it as objective as possible. Because by the time you start making your analysis subjective, you keep on manipulating things to fit into your bias that this thing is bound to go in my direction. It has to. It will never work. That's not the way you want to go. Make sure you have rules that keep you grounded and you keep the analysis as objective as possible if you are thinking of having long-term growth in this market. For this tip number 3, I'm going to let the Nigerian in me come outside. Okay? Because this tip is very, very crucial for every single thing you are going to use your market analysis knowledge for. Okay? And this tip determines whether you succeed or fail. So for tip number 3, we have the infamous risk management tip. Now, let me paint a picture for us. Story time. A trader A, wants to make between $5,000 and $10,000 a month. Trader B also has the same plan. Now, trader A has his trading plan, his strategy, he has everything in check, but he fails to work on his risk management. Now, trader B has everything in play and also has risk management. They execute the same amount of trades, but trader A fails and trader B succeeds to stay within his target range for the month. Risk management is the defining factor that separates amateurs and beginners from pro traders. So if you want to go from zero to hero in the trading and investing space, you have to really work on risk management. Now, let me share a few tips to actually fine-tune and help you work on your risk management to build it so it can be standard enough. Now, first and foremost, you would need to understand your risk tolerance. Risk tolerance simply means how much am I comfortable losing, whether a trade, in a day, in a month, in a year, on my portfolio or trading account. So when you have your risk tolerance in play, you can take this loss without it having any emotional or psychological impact on you, so that you won't be impaled psychologically to make better trading decisions. Because once there's how a loss will hit you, you just lose yourself. You won't be able to make better decisions, and it will also stop you from seeing potential opportunities. So now you need to know and understand yourself and your risk tolerance. Trader A may have a risk tolerance of, okay, I can afford to lose anywhere between 10 to 20% a month, while trader B may afford to lose 30 to 40% a month. Everyone has their different levels of tolerance when it comes to risk. Then again, you would also need to ensure that you have plans that are set in your risk management. Plans, rules that are set. Rules like, okay, let's say you're a day trader. If I lose 3 trades in a day, I call it a day. If I invest into 3 coins and they don't give me as much returns as I expected, or I lose this amount of money this month, before the month even runs out, I'm going to just call it a month and start re-strategizing and waiting for the next month. You need these rules set down, okay? Then there is risk to reward ratio. Risk to reward ratio. Now, if you do not understand risk to reward ratio, you please need to stop trading or investing and go and make sure you understand this concept before you come back. Okay, what do I stand to lose against what I stand to gain? Let me give us 2 trade or investment scenarios. Trader A goes into this trade with $100 but is risking $50. Trader B goes into the same trade with $100 but is risking $20. Now, they both end up making $50 each, meaning trader A ends up with 150, trader B ends up with 150. Now, when you look at trader A's trade, it is not good enough, because in order to make $50, he was willing to risk $50. So that is more like gambling and betting. It is not sustainable when it comes to trading and investing. It is not sustainable at all. While on the other hand, trader B just raised $20 and is ending up with $50. So he has made 2.5 times the amount is risking. 2.5 times the amount is risking. When you look at it, that is more sustainable. You know why? Because now take it that trader B takes 10 trades, risking $20, has a risk to reward ratio of 2.5 times, or even if it's 2 times. Even if trader B loses 5 trades out of 10, or he makes losses on 5 investments out of 10, he's still going to end up having profits, because his risk to reward ratio and system is working. So you need to take your time to understand risk to reward. And like I said earlier, if you need more insights, you need deeper insights, make sure you take our crypto courses, an all-in-one package to get you started and take you from zero to hero in this crypto space. All right, so for tip number 4, we have understanding market sentiment. Okay, so now sentiment deals with how the majority of the people who are participating in the market actually feel about what is going on in the market, or the present trend in the market. And this usually defines what happens in the market, because 80% or 70% of what happens in the market is mostly driven by sentiment. Okay, be it an uptrend, downtrend, consolidation, and everything, it has to do with sentiment. When people are feeling very euphoric and happy and bullish about the market, you start seeing volume and everything coming in. But when they are feeling bearish, they are feeling scared, and all their emotions, negative emotions are kicking in, they start selling off and the market starts getting into a downtrend. While when they are undecided, they are not sure, the market consolidates, just goes sideways. So I hope we've gotten a good grasp of what sentiment does in the market. A good way of understanding market sentiment that will help you to analyze market sentiment better is the fear and greed index. Okay, now this index weighs how the market participants are feeling. Are they showing more greed? They are being greedy, or are they scared? Are they fearful? This is what really drives the market. And when it comes to sentiment, something I've come to understand from my experience in trading these years simply is, you do not always want to be on the majority. You don't always want to be with the majority in the market, because the majority always lose money. And remember, I always said there is a high performing 1% of market participants in the entire market, which means it is only that little minority with the actual money that actually makes money and move the market. And the vast majority in the market that doesn't really have as much money to move the market are the ones that always lose money. So you want to make sure that you do not always follow the sentiment. You need to follow the sentiment when it is early and when people are still skeptical about it, and you've had a lot of confluence about the sentiment and where it can lead to. You don't want to get into the sentiment when everybody is already facing that direction. So if everybody is saying, we're going up, we're going up, we're going up, even if it does go up, sometimes an inevitable retracement just comes and just wipes everybody out. It's going down, it's going down, it's going down, everybody is scared. All of a sudden it just starts going up. So you need to make sure you're on the right side. So with the fear and greed index, you'll be able to see how fearful market participants are and how greedy they are. And one of the most prominent figures in investing and trading has always said, be greedy when people are fearful and be fearful when people are greedy. Okay, so understanding this from a psychological aspect, you'll be able to make better and well-informed decisions. And something I always plead with us to do is always factor in sentiment when you are making market analysis. So alright guys, last but not least on our list of tips is having a long-term vision. Always looking at the bigger, broader picture, not foregoing long-term rewards for short-term gains. Alright, so when making market analysis, it is always important to look at the bigger picture and project into the future. I did not say predict. You cannot predict the future. You're not psychic, you're not a magician, you're a trader. You project under probabilities, you project a probable future, and you need to have reasons why you are projecting for such a future. So you need to look at the bigger picture, you need to project into it, and you also need to make actionable steps that you can follow so that you can always keep yourself in check when everything starts unfolding. So guys, this is all I have for you for now. I really hope you enjoyed this video, and for more analysis and for more tips and every other thing you may need, you can always join our Telegram channel. It's free. Subscribe, join the Telegram channel. Till I see you in the next one, stay rich, stay profitable, and peace.